Welcome back to the stock portfolio update videos. Currently, the two stock portfolios sit at a combined value of 60,800 AUD. That's made up of the 35,840 AUD in my stake portfolio, which is the equivalent of 22,767 USD, and the nearly 25,000 in my Vanguard portfolio. It's been a slow week for investors, and it's actually been a recent downturn. I was up as high as 27% at points recently, but the market's been trading down. The easiest way to look at this is to look at VOO. This is actually my biggest individual holding, and it tracks the S&P 500. I have around $11,100 invested in here, which is around 24 shares. And it's recently down over the last week 3.7%, and in the last month around 3.6%. So it's not been the best time for investors recently, but I've had other holdings that have done a bit better, such as McDonald's, which has bounced back. Going through a quick update of how my portfolio is looking. First of all, Apple, my second biggest individual holding, did have a recent bounce back, but that's turned down, and you can see over the last 3 months, it's down 14%. Going to my actual biggest individual holding is Microsoft. This is a stock that I'm going to be speaking on later that I might be potentially investing some money into soon. It's down 4.5% in the last month, and in the last week alone it's down 6%. So it's not been a good time for other investors, but I'm planning on using this as an opportunity to buy in more. Looking at my Vanguard portfolio, this is actually where I made my most recent investment, and I deposited $2,000 and bought more into VGS. VGS tracks the International Shares ETF and offers around 100 or 1,500 stocks in it, with major players such as Microsoft and many of the ones that are in my stock portfolio covered in this ETF. My goal was to get this to 50-50, and after this recent investment, I've managed to split my portfolio half and half, which I'll cover later when I go through the Excel part. One of the first things I wanted to go through was actually to do with Nvidia. This is a stock I've been covering a lot recently, and it's actually had one of its worst days since March 2020. And as many stocks have fallen, especially tech stocks, Nvidia shares fell 10% on Friday, their worst day for the chip maker since March 2020. Nvidia shares fell 10% on Friday, the worst day for chip makers, when the company's value 1/12 of its current 1.9 trillion market cap. The stock plunge wasn't tied to any news of Nvidia, but Supermicro Computer and one of the vendors that build Nvidia-based servers saw shares drop 23% on Friday after the company broke from its recent pattern of providing preliminary results and announced it would report earnings later this month. In January, Supermicro increased its sales and earnings guidance 11 days before announcing second quarter financials. The company will report fiscal third quarter results on April 30th. Supermicro and Nvidia were the two worst performers in the S&P 500 on Friday. And similar to Nvidia, Supermicro has seen sales skyrocket as of late on the back of unstable demand for Nvidia-based computers that are used to build artificial intelligence programs such as ChatGPT. Having a look at Nvidia stock, it's actually one of the ones I've been keeping my eye on, but I thought it was too late to invest in. This was around $500. I actually opened a short position in one of my other portfolios, but I quickly closed it, which I'm extremely happy I did, as the stock continued to shoot up. I couldn't justify the current prices that it was trading at the time, and I thought it might come down again, especially after it hit the around $900 mark. I just didn't really understand how it was trading that high. I know there's a lot of future guidance, and I think it does still have a place, obviously, going forward, but it did shoot up incredibly quick. You can see over the last year it was up 175%, but over the last month it's down 12%, and the last week alone it's down 15%. So it's not been the best recent time for Nvidia investors, but if you really do truly believe in this stock and you want to buy it long term, maybe this is a chance to buy in at a dip. But it's probably not something I'm looking to add into my portfolio right now. I already have exposure to it in the likes of VOO and other ETFs, so hopefully if it does go up I can ride that, but it's just something interesting that I've been covering, and I saw it had a massive, horrible 10% day, so I figured it was definitely important to bring it up in one of my videos just to kind of cover how that's been going. And the next stock I actually wanted to go through as well was one that recently reported its earnings, and that was actually Netflix. So I've actually got it here for us. So Netflix stock is down after a stellar earnings report. If you actually read through the earnings report, or you only just looked at the numbers, you would have actually thought it did extremely well and the stock would be skyrocketing up. but Netflix shares were losing ground in pre-market trading on Friday despite better than expected financial results and strong subscriber growth for the last quarter. The streaming service provider warned that it would soon stop providing Wall Street's favorite data point for tracking the business. The company also provided full-year revenue guidance that came slight disappointing to investors. For the first quarter, Netflix added 9.33 million new subscribers, well ahead of the Wall Street consensus of 5.1 million, as it tracked by FactSet. Revenue was 9.37 billion, up 15%, edging both the company's forecasts of 9.24 billion and the analyst consensus of 9.27 billion. Profits of the quarter were $5.28 a share, besting guidance of $4.49 and Wall Street estimates of $4.51. Netflix noted that the ad-based membership increased 65%, accounting for 40% of all signups in countries where the company offered an ad-based subscription option. The company sees second quarter revenue of 9.49 billion, up 16%, but a smidge below the consensus of 9.52 billion. Netflix sees profits for the second quarter of $4.68 a share, above the consensus $4.54. While it did not provide detailed subscriber guidance for the second quarter, it said that net adds would be down from the first quarter due to seasonal factors. Netflix said that it expects second quarter operating margin of 26.6%, up from 22.3% a year ago, but down from the 28.1% in the first quarter. Netflix also increased its 2024 operating income margin outlook by 100 basis points to 25%. Citi analyst Jason B. wrote in a note, however, the firm provided a 2024 revenue growth outlook range that a midpoint basis falls below the street. Citi rates Netflix at a neutral with a price target of $660 a stock. Obviously, if you've been keeping your eye on Netflix over the last year or anything like that, you would have seen the immense shot up that it had in terms of its bounce back over the past recent year. In the last year alone, it's up 73%. But if you take a bit of a longer outlook, it's only up 2% because it had that massive downturn. So if you were investing in Netflix here, you'll obviously been reaping the benefits. But in the last day alone, it's down 9%. So down 11% in the last week and basically 10% in the last month. And with the numbers, it did look like it had a strong earnings. Obviously, the ads and the cracking down on sharing the passwords is working. They're adding a massive amount of new subscribers and they're boosting their revenue, but seems like analysts are worried going forward for Netflix if it can sustain kind of what it's doing at the moment. But I think if I was an investor, and I wouldn't be too worried. If it was a stock I was very confident in, I'd probably be buying in now, but that's for anyone to decide with their own financial advice. But it seems like it had a strong earnings, just numbers wise. It's more the growth and outlook which will justify when the next earnings report comes and see what people want to do with the stock. Just another good thing to cover, as the stock has been in the news a lot, especially over the last year with its strong bounce back. Another thing I wanted to also cover was what was happening with Bitcoin. So Bitcoin's network completes its fourth ever halving. If you follow any cryptocurrencies or Bitcoin specifically, you would have seen this has happened previously and it's just about happening now. So the Bitcoin network on Friday evening completed its fourth halving, reducing the reward earned by miners to 3.125 Bitcoins from 6.25. The pricing of Bitcoin has been volatile ahead of the event and fell about 4% this week to trade around 64,000. Mechanically, halving itself shouldn't affect the price of the Bitcoin in the short term, but many investors are expecting big gains in the months ahead. So if you've seen any people on social media or any investors, lots of people are saying it's time to buy in, but obviously, full disclosure, I don't invest in any cryptocurrency. It's not something I follow much, but it's just good something to cover because it is quite popular. Based on the cryptocurrency's performance after previous halvings, after 2012, 2016, and 2020 halvings, the Bitcoin price ran up 93x, 30x, and 8x respectively from its halving price to its cycle top. So if you believe this is important and you think it will make you potentially money, maybe it's something to look into, but again, it's not something I personally follow. You can invest in companies such as Coinbase. I guess they're probably as close as I get to Bitcoin. I do track Coinbase a bit. I do a lot of shorts on them, and their price is obviously tied a lot to cryptocurrency. But it'll be interesting to keep the eye on in the upcoming months just to see how the price does rebound, because the stock has shot up a lot recently. I mean, that's not the stock, the cryptocurrency Bitcoin, and it is sitting there around 64,000. So many Bitcoin investors are quite bullish at the moment and quite happy with how it's gone this year. Looking through my personal portfolio and my holdings, with that market downturn, I'm using this as an opportunity to buy in. I've been putting a lot of money aside, so like I said earlier, I invested $2,000 into my Vanguard portfolio just to kind of beef it up a little bit and get it to 25,000. So I'm a quarter of the way to 100,000, which is nice, and hitting the goal of 80,000 before the end of the year. And then I've just sent another 1,500 to my stake portfolio. So I believe I'll more than likely be investing in Microsoft, as that's one of my positions I really believe in, and it's had a recent downturn. So if I can get under $400 a share, I'll be over the moon. But I don't know if I'll invest anywhere else with the other stocks. I also have around 56, there we go, USD sitting there from dividends, so I'll invest that as well. And hopefully I can use this time to buy the dip, because as I look over previous years, that's kind of something that's done well for me. I mean, look at my Microsoft position, it's up around 47%. If I can use this opportunity to buy in, obviously I didn't want to buy in. I was kind of hesitant. I haven't been investing much into my stake portfolio recently, as I thought things were kind of getting a bit out of hand. And then that's the whole point of setting money aside. So hopefully now, as things drop with the deposits, I can invest and hopefully pick up companies I believe in long term at a reasonable price, which is something I've been waiting for. My goal is still to get this Vanguard portfolio to hopefully around 35, closer to 40 before the end of the year. That'd be a massive goal for me, just because this is kind of it's almost like my retirement account. Or if I'm going for a house deposit, I'll probably sell out a VLC or something like that. This is a stock that's dipped a lot. Maybe I'll buy in again. I'm not too sure exactly how I feel on the Australian market at the moment. It does pay a good dividend. And speaking of dividends, you can have a look here. My dividends did actually come off pending, and they finally got deposited. So I got $80 from my international shares ETF, and I got $143 from my VLC and ETF. So just around over $220 in dividends. I'm just going to reinvest it. So it was nice. I track my dividends. I'll show you on the Excel spreadsheet. On here, I actually track my dividends, and I will be putting that in here at the end of every month I fill it in. And my goal was to get it to over $1,000 worth of dividends this year, just in my stake Vanguard portfolio. So starting off with 220 should be pretty positive, especially as I'm investing more. It just means my dividends will hopefully get bigger. And then any dividends I get from my stake portfolio is just a bonus. You can see I get them a bit more consistently, where my Vanguard dividends are every quarter. So every dividend I get, I reinvest, and then hopefully by the end of the year, like I said, I can get my portfolio to hopefully around $80,000 to $90,000. Looking at how they're weighted, with me investing at $2,000, I was able to get my Australian portfolio to 50%, which is the goal I've been harping on about. So it's nice to finally have that. And then my American portfolio is still looking extremely similar. Still want to get VOO to 50%, so I might invest in that and Microsoft once that money hits my account. And yeah, I can hopefully keep this trajectory of things slowly going up. So I do have some other expenses, like some trips and stuff coming up, so I haven't been able to invest as much. But hopefully when I get back from those and I settle down a bit more, maybe even get a promotion at work, I can invest even more money into my portfolios. But it's looking quite good at the moment, so I'm trying to train myself. It's something I've been trying to do. I did a lot through 2022, when things kind of dipped, was to buy in. And this year I've kind of reaped the rewards for it. Even last year wasn't the worst. So that's something I want to kind of implement now. And then I'll keep tracking on making videos and shorts just to kind of check my updates on how my portfolios are performing. The reason why I invest a massive chunk of my money into this is because I don't ever take it out. So it's kind of, I can set this aside, and then maybe one day if I want to use it for something else, I can take it out. But it's nice updating these videos and tracking it along. And especially as more and more people find the channel, it kind of just holds me accountable to keep doing these videos. So that's all for now. Currently the stock portfolio sit at 60,800, and hopefully by the next video the markets have maybe gone a bit more in our favor. Cheers.